I am honored to present today's featured speaker, Bryce Davidson, certified home insurance counselor and vice president of Davidson Insurance. He's going to be joined by our very own CCAR immediate past president and valued member of CCAR's board, Heather Renner. So, Heather and Bryce, the spotlight is on you.
Thank you, Amy. I appreciate the opportunity, the introduction. Thank you to Heather and everybody else on the CCA board. Really appreciate these opportunities just to talk a little bit about my industry. I've never met somebody in insurance that doesn't love to talk, so appreciate the forum. Also, real quick, Nelson, thanks for that information. I just wanted to compliment your team. We had you out to my house to inspect our appliances. That was such a great process. I recommend everybody do that from a risk management. And more importantly, the pitch for the earthquake shutoff, that's such a value add. I actually wrote it down and I'm going to give you guys a call because when we work with people in California, that's a requirement for buildings. It's not a requirement here for insurance, but that's such a value add. So I would just encourage everybody, please take Nelson up on the things that he mentioned for everybody.
Hey,
But yeah,
Bryce. Hey,
yes,
Bryce, before you get going, I just wanted to, first off, we're super, super excited
yeah.
to hear what you have to say, especially with this being Realtor Safety Month. And people are probably wondering, why do we have insurance going on? Well, this is going to be a presentation, which I'm stoked to hear about, especially with all of my meetings over this past summer related to insurance and all the questions that I asked you. But all about how do we safeguard our transactions, everything from starting from the listing side of things to buyers, and then obviously in your own household. And so that said, as you're going throughout your presentation, Bryce, I know that you were very much open to people asking you some questions. And so if you do have a question for Bryce, if he touches on something within his presentation and you've got a quick question about that, please feel free to put that in the chat. I'll monitor that. And then I will either ask it when it's appropriate during the presentation or we'll save it for the end. So thanks so much.
Perfect. Yeah, I love lots of questions, so please put them in the chat. I want to make this, ring true for y'all. So again, thank you. One moment, let's see if I can share some information and we'll get going. All right, you should be seeing our nice little logo and avoiding insurance pitfalls.
We
If you don't see it,
are.
let me know in the chat. So thank you. A little bit about myself, Bryce Davidson. Appreciate being here. Part of the team at Davidson Associates Insurance. Our team's been doing this a long time. We are actually now the largest locally owned presence here in Clark County, independent agency. We have 28 people. It's been awesome. We love having local people working here. And if we haven't worked together, or you don't know who we are, we're an independent agency. All that means is we're not a franchise. We're not employees of a specific insurance company. We have a lot of options for people, whether that's commercial needs, personal home and auto, or life and disability. We are a full service agency. About the only thing we don't do is financial services or health insurance related things. So that's not really in our wheelhouse. And then we have the wonderful honor of earning the Best in Clark County Award for a number of years. Looking to add the next one in a couple weeks. So look for the paper on that. And then we do have our national designation for a best practice agency. But on to the show. So let's just call a spade a spade. Why does home insurance in Washington suck right now? It honestly does. I mean, you probably all feel it as homeowners, and you probably all feel it as part of your transactions. And so that was really one of those things of, hey, transactions are really getting impaired right now because of home insurance. And so we're going to dive a little bit into how to help you later, but we're going to take a step back and maybe talk about a few things that have led up to it, just so to provide some context. So if you didn't already know this, there are a ton of rating factors in home insurance in Washington. It varies by state and varies by company. And some of them you can control. So it's the type of the home or the people that are buying the home or living in the home. But then some of them are out of your control. And so the reason why I wanted to touch on this, a lot of the things that have happened in Washington aren't actually a result of the home, the age of the home. That's just part of the factor, or aren't as a result of the person that is going to be buying the insurance or using the home insurance. That's only a portion of it. So, again, for the person in the home, I listed some of these rating factors, but in Washington specifically, everybody that needs insurance or works around insurance or works in insurance is challenged because insurance carriers haven't been profitable for a while. And so when they're not profitable, they don't like to do business and don't like to sell. They restrict underwriting. They only work on a target market. So insurance carriers have really played a part in this, leading to this, problem that we have that you're feeling for insurance in the transaction. Then I'm gonna also, try to be very respectful, but it's a challenge working with our current insurance commissioner. There's a history of disagreements with that, but it's a necessary thing that we have to work with. So I would say that Washington, compared to most states, is very challenged by our insurance commissioner and some of the things that they're doing that directly impacts the end result of the product. Oregon's setup is completely different, and they're a completely really different place. So people that work in Washington, Oregon, the insurance market in Oregon is spectacular, especially for home insurance. Washington, it's rough right now. And then more importantly, again, state, not a lot of companies want to do business in Washington anymore, unfortunately. We are challenged by if you had to divide the states into quartiles as far as ease of insurance companies wanting to do business, we are in that bottom quartile that also includes California, Alaska, Texas, Florida, and a lot of the Gulf states, which is really challenging. Companies don't want to be here for insurance purposes. They're here because they have to. And so we do struggle with that. And more importantly, some of the factors that are affecting what you're feeling is the agent reality. We have a lot of people retiring from insurance that have a lot of history. So we got a lot of people that don't really know what they're doing. There's not that knowledge of product that you're encountering anymore. And more importantly, the inability to access new products or multiple products at once. That just makes it more difficult. So all these things are factors that make it harder on you as realtors to provide value. And so again, I would say it's not just you. It's honestly not a lot of things that you can change. We're going to tell you some things that you can change, but these outside factors are directly impacting you and your clients. Now, specifically for Washington, for home insurance policies and carriers, we're going to talk about a few things. If you haven't noticed this, I wanted to point them out. In the last 2 years, there's been upwards of 37% on average of rate increases for home insurance across the board. Again, this is the average. So you probably noticed this, but home insurance is costing more. And that does impair transactions. More importantly, what used to be a broad offering for most homes to get a preferred, which means the best price insurance policy, carriers are cutting back on that. So if you have an older roof that's 20 years old or 20 years or older, old plumbing, old electrical, knob and tube electrical, if you kind of think about that, certain plumbing is not going to get you that best policy anymore. And also proximity to fire stations and whether it's manned or not is really impacting, are you going to get that best price? So those are some of the things. And more importantly, the last thing that people and insurance companies don't like to talk about is what happens when you have more than one claim. Again, insurance is meant to pay and be there if you do have a loss, but then if you have too many, insurance companies might not want to be in business with that person or that home. So these are all impacting things to get the best premium and the best policy. Now, with Washington, we thankfully have a lot of options. We have what they call a fair plan. If you don't qualify for a preferred option, not every state has this. So this is an optional last resort. It's expensive. And then we also have what they call non-admitted policies. And so what this means is we are seeing more homes than ever before. It's up almost 30% in the last year. Go to this non-admitted product. That's fancy insurance speak for saying, hey, it's not guaranteed by the state, but it's if you can't get a preferred guaranteed policy, this is your next best bet. And we're seeing people, depending on age of the home, the roof, the proximity to fire stations, number of claims, have to dip into this non-admitted area. The other thing we're actually seeing that's outside, that's more on the insurance company changing, that's affecting things is, drone usage. They're using drones for inspections. So, that I see that only increasing, unless there's some legal challenges to that. Also, mapping of tree covering or overhang. We got wonderful forests. We love the greenery around, but insurance companies are saying, hey, if you have too much of that, that's not something that they're going to want to insure anymore. Interior, exterior, photos, inspections, self-inspections, these have all increased. And then more importantly, what we're also seeing is any published photo online, underwriters are looking at. I have underwriters that I know they specifically go to listings and they want to see what's on there. So if you have old photos of a chicken coop, or you have old photos on there of a car on blocks, that underwriter is going to have a lot of questions and they're going to want to see updated photos. So people are really looking deep into homes that more than ever before, which again, all of these lead to more headaches for y'all, which I would like to apologize. My industry sometimes is great and my industry sometimes really fails. I think my industry is failing our partners on the real estate side right now, given all the challenges that we do, let alone our customers. It's a challenge. The other dirty secret that I think is going to affect you and your clients is there have been an increase in cancellations after issuing within 60 days. So Washington says that if an insurance company finds something wrong in the application, wrong in the inspection, they have 60 days within they can cancel the policy. So we have seen an enormous increase in this where they've looked more at the roof, they've looked at the fire mapping, they've looked at the inspection more, and they've said, you know what, this isn't what we want. And so you have your 60-day notice. And so customers will lose their new insurance policy, even though it was for a year, they lose it in the first 60 days. So again, that is one of those things where it impacts customers and you all post close. The other challenge, like I said, our state is not the most attractive for insurance companies to be in. And so what happens to that is we're kind of left with this mix of not the best companies. And so some of that is we've had companies that stay in here that don't have the best financial rating. So I would say that it's important always, always to make sure you know the financial rating of the insurance company that you're with. Some of that is going to be dictated by the lender. They're going to have requirements of the financial rating for the insurance company. Sometimes it's an A, sometimes it's an A minus, sometimes it's a B plus. The B plus is the floor. So if you see anything less than a B plus, that is a major, major red flag. We will not sell or work with an insurance company that's below B plus. Reason being, not that I actually think they're a bad company. I actually lose my errors and emissions insurance if I sell a product with a financial rating below a B plus. So we won't actually do that because we lose our coverage. And then we talked about insurance companies leaving the area. Here, these are three that have impacted in the last couple of years. They've just said, "Hey, we're done with Washington. We're done with the Northwest. We're not going to be in here." So all these are challenges that make it a little bit more difficult. I'm going to pause here real quick. Are there any questions that are in the chat or?
I am not seeing anything from the chat other than if the slides that you're sharing with us will be available. And obviously, we would need to get permission from you, Bryce, to share those out to
You can have them.
everyone. Perfect. Well, there's your answer, Mr. Mike in the chat. So, I've got several questions, but I think I'm just going to wait probably until the end. But I'll keep monitoring the chat. It's very, very interesting information for sure. So I'll let you continue. Thank you.
Thanks. All right. I think realtors have a real challenging role in the home process. I know that you all love what you do, which is great. And I think that helps override some of the challenge that you have, lending, inspection, playing counselor to different opinions for people. And now we're taxing you with learning a little bit about insurance. So I'm sorry. I think the best thing you can do is develop a relationship with somebody that's in insurance to help with this stuff. But some of the things that might help you all, you don't have to jot them all down or remember them all, but here's some things that really is going to make the insurance world a little bit better for you, better for your client during the different parts. So, during showings, what I would say, pay attention to the roof, pay attention to the age, ask these questions, electrical information, specifically knob and tube. So again, if something was built in the last 20 years, it's not going to have knob and tube. But if something is an old 1900 home and it's been updated, make sure there's no knob and tube in there. That really, really impacts the ability for preferred insurance pricing. Siding and painting condition. This is another one. With more inspections, if there's any sort of issue with siding, again, it could be in the backyard. Some inspections, they'll actually go into the backyard, or more importantly, an outbuilding. Again, if it's an attractive nuisance because the outbuilding is falling apart or hasn't been painted recently, insurance companies are going to pay attention to that. Fire access, rural conditions. So just make sure you know where the closest fire station is. That's good risk management just in general. Understanding, is it monitored 24/7 or is it volunteer? That matters too. These are good things to know and talk with people during the showings. Septic. So is it on a utility? Like sewer, or is it on its own septic system? That matters. That's going to matter also for the future, kind of wear and tear happens on that. Insurance companies don't love wear and tear. We're in the accident business, not in the wear and tear business. So that's important to know. And then our biggest thing, we don't necessarily have a ton of homes with basements, but it occurs. And the biggest thing is, if you're looking at in a showing, go down to the basement, see if there's water there, because we have a lot of rain, shocker, and it seeps through the concrete and it creates a big problem for homeowners. And that's going to create multiple water claims that could happen. And sometimes those are covered, sometimes those are not. And so making sure the buyer knows that ahead of time is really going to help them. They're going to remember that. Now, as far as listings, when you're kind of out there, what can help you decide, is this a good listing? Is this not something we want to work on? Again, the legwork around it, I think, is important to know for insurance. Now, again, some of the stuff is similar. Age, maintenance of roof, what it looks like. More importantly, hey, are they going to want to replace the roof? Are they going to have some put a little side money around to replace the roof later? Because that will matter. Siding, same thing in here. Maintenance records just in general, septic, that's a really big one, as well as any sort of, appliances, any sort of HVAC. It's good to have those maintenance records available. One of the specialties that we have is flood insurance, in multiple states, but this happens usually up by the Woodland area, out in the Washougal area, and in pockets in Clark County, believe it or not, these isolated pockets where homes are now built. If there is any concern about flooding, make sure that, so that it's hard to find that cause in the transaction, not get one if you root this closed timely manner. Russian free can be bad as other way fire stations. This is going to be key. If you can get it cleaned up ahead of time, obviously the house is going to look nicer, but then it's also going to insure easier. You have adequate clearance from brush or trees. That's key.
So Bryce, we do have one question.
All right,
I'm
let's do it.
pretty sure, because I did my due diligence, looked at everything before our meeting today, and cover this question on this slide. What
Okay.
great segue. You had mentioned do the so one of the questions was look at your
Um, good segue. Appreciate. Great question. It used to be my industry. Hey, I haven't made an offer yet. Bought the car. Why do you need to know? You don't own it. You don't have an insurable interest. Um, that has kind of changed in reality, and so I think my industry is partially blamed because we trained you all not to get information until either the last minute or you have an offer. But I would say if it is not the newest home in the middle of downtown Vancouver or a major downtown city, you need to start that before you make an offer or consider it, especially the further out you get, the older the home you are, the bigger the home it is. Make sure you can insure it before you put an offer on it. This has really been the new norm in California because the market is worse than Washington. But I would say, hey, if there's anything that you're concerned about, talk to an insurance partner. Go get an estimate. Having that ahead of time isn't going to be a big deal. You can usually get a bindable insurance quote. So that means you can actually buy the insurance proposal, not just, hey, it's a fly-by-night quote, within 30 to sometimes 45 days, depending on the company. So you can get a far out issuable policy that's going to help. So yeah, I would say find an insurance partner. They're going to help make this a lot easier. They're going to help you talk about risks. And when people call me for flood insurance, I do this a ton for flood insurance. Does this home require flood insurance? Does it not? We're looking for a fire station. We're not sure what the rating is. Can you help us? It's a rural cabin, or this is not connected to utilities. What do you think about it? So it's important. We talked about this additional inspections and disclosure. So keep all documents, kind of keep them in a nice, neat file. Make it easy for the client. That's really going to help them. And I say put things in a nice, neat bow. And then disclosure. I think it's tricky, right? You want to paint a nice, neat picture of the home. You want to make sure you're speaking the truth. But I think the best thing you can do is talk about any known issues. So prior home claims, they're going to find them either way. I mean, in my home that I have right now, the owner didn't tell me that they flooded the bathroom and replaced all the hardwood. I found it when I pulled the prior reports. Again, I like the new floors, so I'm not going to complain, but it was one of those that would have been nice to know ahead of time. Fire station response, that's a big deal, especially with maybe changes in Camas and Washougal. That's something to pay attention to, especially out on the east of the county. The other biggest one, easements. Oh man, if there are easements or property issues, we need to know them. Insurance companies don't like knowing that there's people other than the property owners on the property. That gets them really, really nervous. So easements tend to be a hiccup.
Do you have
And
a
again,
question for you, if
oh
that's
yeah,
okay?
go ahead.
Just because you're in the disclosure portion here, I do have a
Yeah, let's
question
do
of
it.
what would be a report, and I'm assuming that this question has more to do with the claims piece, because in our world, we have seller property disclosures and we share it's better to disclose than not. And at least with my clients, I make it a practice of even if you did repair something, whether a claim was filed or not, disclose and then the corrective action, and then obviously back that up with any receipts and those kinds of things. It just provides more ease and comfort. So but what type of reports should a buyer ask for, if there are any, as far as any claims?
So if you are the buyer, when you get an estimate on the insurance or proposal on the insurance company should already run what they call a clue report, and they can share that. And you can ask, hey, how'd the clue look? Sometimes it's disclosed, sometimes it's not, especially if there's nothing in there. We're probably not going to say anything. Sometimes if there is a claim, we will let you know. So it's called a clue report. Think of it, it's a aggregating system that pulls in from a lot of different insurance companies prior claims that had payout or even maybe a $0 payout. So a closed claim will show up on there.
Thank
And
you.
that's on the buying side. If you're selling the home, hopefully you remember you know, what happened if you don't call your current insurance company and said, hey, can you remind me if there's any losses on the house? They have it. Did that help answer the question?
That does. I think so. I'm not getting anything in the chat that says it doesn't. So you're good.
Yeah. I think the other real quick thing is, hey, I understand as realtors, you wear a lot of hats. And so anything you can do to educate buyers or direct them to the right person to educate them is huge. Um, just remind people there's a lot of companies still out there in Washington, even though some of them have left, that want to do business, depending, some of them are profitable now. And so they're really wanting to write business. And so other ones are still kind of skittish to dip their toe back in the water. And then I think I really like the affordability discussion. I have that with clients, specifically around flood insurance. Question is that if you have a home that you like, one and that has a flood insurance need, so let's call it $1,000 a year that you're going to pay me to help you get flood insurance for 30 years. And then there's another home that you equally like that might be 20,000 more than the one with home insurance, but you don't have flood insurance. I would almost say your affordability, while the one is a little bit more costly, your affordability to avoid that flood insurance annual expense that's just going to rise is better on the secondary home. So really think about what is the long-term affordability, especially when you have layers of expenses that aren't going to go away on the insurance side. I think the other thing that we're running into too is needing for additional work, remodels. If you really love the home and there's work to do, great. But don't try to fall in love with a home that has a lot of work that needs to be done, because those are additional insurance considerations that you're going to have to deal with. It's going to be harder, more headache in the future. Um, so hopefully those things help. Now, I do like to start looking a little bit of a crystal ball as an independent insurance agent, been doing this a long time. I kind of like to say, hey, great. Sorry I had to deliver the bad news. Let's maybe talk a little bit about things you might want to pay attention to later. So, key insurance products that might make a difference for people later. Smart monitoring devices. The this has been a game changer. Adding alarms is never easier. Adding water shutoff valves is never easier. This is how you protect the home. Additional coverages such as insurance companies are now offering, even though they require high deductible, they have buyback options, so that you might not love the fact that you have a $20,000 wind deductible or $20,000 wildfire deductible, but you can look at buying that deductible back if your home is stuck with this. The other thing that's sitting on here that's I think is big. We're big on not only business cyber, but personal cyber. This is our biggest risk. So much of our lives is online, so much of the things that we do. And everybody they always get the transaction education, wire education stuff. So what can you do? A customer can buy personal cyber to help protect against accidentally wiring funds to the wrong place. So during the transaction, before the transaction, they can get personal cyber to protect that if they're really worried about it. And not only is it, that wire fraud issue, but we've unfortunately, I think probably maybe heard of people in our area dealing with fraudulent listings. People were listing a home that wasn't really for sale. Cyber will now pick this up. So if you're really concerned about it, you can get personal cyber to pick up the attorney fees to make this right, or help deal with that. My only complaint is $100,000 or $50,000 really isn't a lot. It's very affordable, but when you have to wire a large chunk of money, it's usually going to be over $100,000 on most transactions. Flood insurance. If you're dealing with flood insurance, expect it to never decrease. It's only going to go up. Bigger homes, they're looking at them more. They take more time to rebuild. There's going to be potentially more exclusions. We're seeing larger homes are more rural. You like the space, you want a pretty view, but you likely are going to have fewer companies that want that $5 million home anymore. They're kind of going to be a little bit more picky. And then the other thing that in Washington we have to deal with now, we talk about umbrella. So this is excess insurance above the auto and the home or watercraft policy. There are certain companies that have gotten out of it. State Farm is no longer offering umbrellas in Washington. So they're just saying, hey, we're done with this. Other companies, Travelers, they said, I don't care who you are. If you want an umbrella over 5 million, doesn't matter that you're related to the CEO. You're not getting additional limits of liability above 5 million. So I think that's going to be a big pain point for people for additional limits of liability. And $1 million isn't what it used to be. I mean, that's a real big concern. The other thing that we're seeing is more companies on an umbrella are saying, if you're volunteering on a board, if you're on an HOA board or, any sort of nonprofit, you have a D&O exposure. You're making decisions. Most companies used to pick that up on the umbrella. A lot of them are saying, we're done with that. So if you're volunteering on a board, make sure you understand your D&O exposure. That's probably the biggest thing to pay attention to. So that's a little crystal ball.
How about earthquake insurance? We didn't
Oh,
really
yeah, I love
do that.
earthquake.
Yeah.
There are a lot of great companies out there that are still doing earthquake, and they're not pulling back. I would say some of the national players are pulling back. They're increasing the deductible. They used to give you 10% deductible. Now they're doing 15 or 20, which if you think about it, $1 million home, 20% deductible, 200 grand. That seems a lot bigger than just the 20% deductible. So pay attention to that. But there's a lot of monoline, so they do earthquake only. GeoVera, Palomar are two big ones. American Modern is another big one where they'll sell you earthquake. They got plenty of reinsurance. They're good financial rating, and they will go down to like a 5% deductible. So when you have $1 million home, that 5% deductible is a lot more attractive than the 20% deductible. So, yes, earthquake is recommended. Earthquake is still relatively an affordable option for what you're kind of getting. The only probably outlier is if it's an older home and the foundation hasn't been retrofitted, that's going to be a pretty big premium on
Interesting.
there.
Okay.
Yeah.
Okay. Yeah, I asked that question specifically, selfishly. I have earthquake and I have with one of the companies that you just mentioned. And we do just because we live in rural, but Mount St. Helens is our view, if that tells you anything. So, we're hearing more and more about it. And I don't think that those are conversations that get brought up very often.
Yeah, good one.
Yeah.
There and kind of just like looking at there are more products that are coming around there. It's like parametric earthquake insurance. What that means is instead of damage to your house, if there's an earthquake that's over a certain rating on the Richter scale, they're going to pay out a limit. So there's new approaches that are happening in the earthquake world. And actually, we're starting to see maybe a little bit on the flood. It's more popular on the earthquake, where they say, hey, it's not damage to your house. It's saying if there's an earthquake in your area that's of a certain size, you can buy insurance on that and get paid on that. So sometimes if you have an older house, that new version of earthquake is a better option because it's if the earthquake's a certain size, not what condition your home is in. More kind of things that I guess just good information to know. Again, I like to kind of give some future looking. Credit in and out of the products for personal lines in Washington has been a big headache in the last, since 2021. This love-hate uncertain future is not going away. I'd say what's happening in Senate Bill 5589, they're studying credit again. What that really means, I think the OIC is pushing to remove credit. So this is a tricky topic because it helps some and negatively impacts other, right? Credit, if you got great credit, so maybe you are looking to downsize, you have the highest credit, you're getting ready to retire, you're getting the best discount, and on a fixed income, you really don't want your fixed costs to change. Versus maybe if you're a new home buyer, this is kind of a challenge area because you are scraping every penny together to establish the credit and you don't get that credit benefit right now. Now, if you pull credit out of stuff, one side is helped, one side is hurt, and so it's really tricky. I think from our industry, we just want stability. Keep the credit in, great. Pull the credit out, great. Just don't keep flip-flopping back and forth because that's really hard for customers. It's really hard for companies to want to be in our state.
Yeah,
So
consistency helps our industry too. So,
yes,
yeah,
yes.
yeah.
So, I would pay attention to that. That's something to look for. The other thing that's coming, if you don't already know, is the transparency rule. It's already happened. So you can right now write to your insurance company and get an explanation of why your rate went up. But what's going to happen in 2027 is anytime the increase is more than 10%, they're required by law to send you why it went up. Now, the concern is what they're going to send you isn't really going to be helpful. It's kind of going to be like that credit disclosure that says, number 27, number 45, right here for more information. And so that's probably what it's going to look like for legal purposes. But the goal was to be more transparent with exactly the factors of why a rate went up. My biggest thing is call your agent. They'll tell you. I mean, I can talk to an underwriter. I can look at kind of the inside rating factors of all our insurance companies and say, yeah, hey, honestly, some of it was related to credit. You got $1 million line of credit. So that makes insurance companies a little bit nervous. Or, yes, it was related to claims. So I see that it was factors related to claims. You lost your claim-free discount. So I would say at the end of the day, while these transparency rules are nice in general, just call your insurance company or call your insurance agent. They're going to help you more. All right. Yeah, this is my estimates on home insurance. Are there any other questions?
Don't have anything as of
Okay.
yet. I've got a couple at the end.
Okay. I'll quickly go through this. So don't expect massive rate increases for the future. Low double digits is what I'm expecting. Most companies are profitable right now, so they're not having to do the massive swings that we saw in the last couple of years. So that's good. I think there's still going to be some extra documentation that's going to be needed for buyers. What's the age of the roof? Are you sure it's 5 years left in the life? How do you know? Do you have a roof certificate? When was the piping replaced in the house? Do you have a receipt? That's what they're going to ask. Home usage has become a massive factor, and it still will be. Insurance companies are historically unprofitable for investment homes and landlord homes, single family, duplex, triplex, fourplex. More companies are actually getting out of this nationwide. Progressive got out of it across the whole country. They basically said, we're not doing these anymore. We're out. So they non-renewed their whole book. I would expect more companies to follow that pattern. So that's going to mean more expensive for those types of homes. Remodeling homes, vacant homes, prices of that insurance continue to go up, unfortunately. And then again, fewer preferred options. Companies are going to be more protective of their bottom line. So we're going to have to write more non-admitted policies, more fair plan stuff. If you have an old manufactured home that's from the 80s and out in the woods, your only option is going to be the Washington Fair Plan. So just be mindful of what you're listing or what you're having your buyer look at. Again, I think this is what's a buyer to do. Secure home insurance sooner rather than later before the offer. Have insurance. Look at more than one insurance company. Go to an independent agent. Go to multiple direct writers. Ask for offers. And then I always get nervous when I put this, but I think it really helps. If you see a lender is estimating home insurance below $150 a month on that, I would really challenge that. Make sure that those estimates are correct. Not saying you can't. Again, D.R. Horton makes a really small house that, insures really cost effective. But the average home that you're going to see, I would just say, hey, $150 is a good estimate. We always hope better, but again, you hate surprises. And then there's always kind of the bait and switch, hey, here's a quote, but you got to call for more information. Don't be fooled by that. Make sure you get an offer that you can issue. and you can rely upon. So there's no, last minute struggle. All right.
So, before you go
Yeah, go
further,
ahead.
that was actually a perfect segue into one of my questions, if you don't
Yeah,
mind.
go
And I
ahead.
don't know if you're going to be able to really answer this just because of how insurance rates get factored and so on
Yeah,
and so forth. So I'm just asking kind of from an average. And the reason for this is because of all of the interesting challenges that we've been having in this realm, and as it relates to transactions. We as a community, realtor community practitioners are being encouraged to include a homeowner insurance addendum with their purchase and sale, and large in part due to if there's financing involved, there's already that kind of built into there. But and you've said it many times during your presentation, it is specific to whatever the lender requires. So this homeowner's insurance contingency puts kind of another safety mechanism, if you will, where the buyer can make it contingent upon obtaining a binder for a standard policy of homeowners insurance. And then they start putting these figures, if you will. And I mean, we're not insurance agents, so how are we supposed to know whether or not that's a fair thing for our seller to consider, or if it how even to counter it if you can. But for an example, kind of the default rule of thumb that shows up in this insurance contingency is a homeowner's insurance at an annual premium not to exceed 0.5% of the purchase price, and with a deductible not to exceed $2,000. So I don't know if that's something that's adequate. And obviously it's going to depend upon, the price of the home, but let's say it's a $500,000 home, right? Like in Vancouver, what are your thoughts around that?
So I think generally speaking, it is smart to have another way out for the buyer if
Hmm.
needed, and not rely on, hey, they couldn't get insurance, so then they couldn't get financing. So I think that is a great starting point if you can get it in. So like it's always good to ask that. Now, as far as the exact details, hey, $2,000 deductible, a certain percentage of what it is, um, that's going to vary wildly by the house, and the area and the buyer and a few other things. I think if I probably had to just roughly give some estimates, the further, more rural, the older the home, yes, put that in there. Push harder for these kind of disclosures and requirements, or the way, make sure there's a way out if it's a really, really unique home. If it is, again, not that I'm partial to it. If you're that like DR Horton single car garage, 1,300, 1,400 square foot home that's brand new, um, and you're like, hey, do I put this in here? Do I not put it in there? I wouldn't kill the transaction over trying to put that form in there on that specific type of home. And then I guess if you have questions about it, if you're odd, talk to somebody in the insurance world. Hey, this is what I want to put in. Are these numbers, do you think they're correct for this home?
Hmm.
We spend a good percentage of our time talking about pre-underwriting and talking about just risk management
Hmm.
before we even get to selling policies. And so I think having that value add is going to make you stronger, put a stronger an offer, make you have a better outcome for a client.
Sure. So from a seller's perspective, I think maybe I'll word it this way. So I represent the seller, and I'm an advocate for the form. I understand that. But from a seller's perspective and the listing agent representing the seller, um, how do you advise, whether or not that's a realistic number that's put in there? And maybe I'll frame it a different way is I understand things are credit rated, so I don't even know if this is something that a seller could do, but should a seller consider getting an insurance pre-quote before the listing? Or like, I mean, I don't even know if that's an option. I guess what I'm getting at is how do I know that those numbers are fair and adequate, and not unrealistic as I represent my seller?
Yeah, on the seller side, you know, I would say even if you did get a pre-proposal, saying like, hey, this is what I got, I think it's gonna vary so much.
Yeah.
It's gonna vary too much, so it's not
Yeah.
gonna be valid for every potential buyer. Um, that that is very, very tricky given all the potential buyers that are out there because a cash buyer is going to be way different than somebody that's putting 2 or 3% down. And I've seen that sort of I would call insurance score background, cash
Uh-huh.
buyers versus,
Yeah.
someone's getting a lot of help or zero down. Um, Vary so much. It's been $1,000 vary for premium per year on the home. So I think unfortunately it's a little too tricky, but I would say usually people that again, if you're trying to help the seller, talk to an insurance professional on this. They'll at least help you. They'll kind of say, hey, don't mess with it, or hey, I'm able to help you. Here's some estimates. Um, that it could vary. How's that? The good old insurance term.
Hey, that's great. And then I know you're going to go into your referral
That's
rewards
okay.
program, and hopefully I'm going to help you with this because of all of the great information you're sharing, and obviously you're proving that you know this stuff inside and out. But you had mentioned at the top of this, outside of the factors as far as specific to the borrower or the person looking to be insured, as well as the condition of the home. There's obviously some outside outlining factors that affect
Yeah.
all of that. And so in that kind of vein, and mainly obviously from a policy perspective, what would you, as the practitioner in your industry, what would you like realtors to know or support in terms of advocating for insurance accessibility and affordability? And this is a little bit of a loaded question because I'm very heavily involved with government affairs. I deal with RPAC for our local and our state level. So anything I can do to help advocate for our communities and our consumers, and obviously my own household, I will do. So, and rather than sitting back and complaining, I'd like to be at the table to have the discussions and educate those that are making policy.
Wow. That's a good question. And there's so many ways that I think I could take, but I I think having people that are supporting industries around the real estate world, hopefully they view this the same. And I would say hopefully the public can kind of get on board with this. Um, a cheap haircut isn't good. A good haircut isn't cheap. And so I think if you apply that to a lender, a good lender that's going to close on time, there might be a premium to his product or her
Mhm,
product.
mhm,
A good realtor that provides additional value add services is going to want to rightfully get paid for their time. And so they might not want to have this discussion about, oh, I don't want to pay for this service. And similar insurance. Insurance is the law, a law of large numbers, right? Groups of premium are paid in, and then there's payments out. And it follows the more advantageous the policy, the better the language that's in the customer's favor, the more ways that they can pay for claims, it's going to cost a little bit more. And so I think that's helping people understand if they're protecting their single largest asset, they are buying $1 million home, they're upgrading. This is kind of going to be their nest egg that they're going to want to sell later. Um, do you really want the dominoes of an insurance policy? Not that it is not a place for it. Not that I didn't love dominoes when I was in college, but I would prefer maybe a different kind of pizza now, especially if I want a better quality. And so uh, help reinforcing you get what you pay for
mhm,
and don't go cheap on your largest protection of your largest asset. We see that too often. I
mhm,
mean, in fairness, I had somebody up in Bremerton. We work up and down the West Coast, so this was up in Bremerton. Um, $1.8 million home. They couldn't find a policy at first. We found one that was fairly steep, about $8,000 a year, because it was under construction. Again, that's a big premium. But when I look at the decision that was made, they decided to take the forced place insurance from the bank at $500 a month instead. So roughly $6,000 a year instead of the insurance that was going to protect their $1.8 million home for $2,000 more a year. So
Mhm.
we see that people don't always make the rational decision. And so helping people understand some of that, protect your largest asset,
Yeah,
probably goes a long way.
gotcha. Gotcha. Okay. Well, I'll let you go into your referral program. Thank you.
Yeah. We've been part of the community for a long time. Every referral we get, we donate $25 to a local nonprofit. This month it's Partners in Careers. So please help us give money to Partners in Careers. We love it. We give it whether we close the deal or not. That's how we work with the insurance commissioner. There's nothing contingent on it. The other one, piggyback on what was said before, Give More 24. It's finally back. This is one of those. We've actually been the presenting sponsor for a number of years. We're the presenting sponsor of Give More 24 again. So please get involved. Please help donate. Doesn't take a lot of money. Give More 24 is all about number of people giving, not necessarily the gifts. And so please support your favorite nonprofit, including the association. They didn't pay me to say that, but
We
so
appreciate it.
yes.
Thank you.
But just we want to have a big year for Give More 24. I think the community missed it, and kind of what was replaced really wasn't locally, what didn't resonate. So that's why we wanted to participate in bringing it back. And then last but not least, always good to end on a laugh. Keeps me laughing and keeps my team here. That's how we feel sometimes in the insurance world. I'm sure you do. And then more importantly, underwriters make our lives crazy. So we feel like everybody out there that just is really unique must be an underwriter in our world. So
Oh, I love it. I love it. Well, gosh, Bryce, I so appreciate, and I know I speak for everyone that's watching as well as our association. You were very informative, and I walked away with a lot of wonderful tips and suggestions. And my takeaway from all of this, I'm just going to read my notes, is that we as realtors can better serve clients by proactively identifying potential insurance hurdles and asking the right questions and advocating for solutions that support affordable, accessible coverage in Washington state. So, big proponent of increasing realtor education on insurance challenges. Thankfully, because folks like you, we have that resource. And then, as you mentioned it many, many, many times, the key point is collaborate with your insurance professional for those training and resources. And of course, as someone involved in government affairs at RPAC, do all you can to get involved and advocate with policymakers to recognize insurance availability, because it's a key part of our housing affordability. Well, so
yeah.
I don't see any more questions in here, but do you have any final thoughts before we let you go?
I just thank you for the opportunity to be part of this stuff. I really welcome this. So if anybody, sees this or has another topic they want me to discuss, happy to do this. This is part of our outreach. Doesn't
Oh,
keep
it
the
looks
light.
like we need your contact info, sir.
Oh,
So if you want to put it in the chat, that would be great.
I will put it in the chat. So no problem. I'll put that in there right now.
Okay.
I also
Wonderful.
like to say, to reinforce what you said, Heather, about, hey, get involved. I'm a big believer. You're either at the table or on the menu.
Yeah.
So our industries are tied together. I love it. I love the association. You help my world. I think it's the insurance world's time to help you all. So
Well, the
if there's
feeling
ways
is
that we can help,
mutual.
you let us know.
Yeah. Thank you, Bryce. All right, President Amy, back to you.
Thank you so much, Heather, and thank you so much, Bryce. I learned a lot. I hope everybody did. And thank you for plugging Give More 24. We appreciate all that you do for us and for some of our favorite charities. I want to kind of underscore a couple of things that you said about personal cyber insurance. Awesome. And that underwriters often look at our old photos, at old listing photos, to get additional information. That was really good good data to bring up to us. We appreciate it. I've got a huge list, B+ financial rating. I've got all kinds of notes that I got from you just now. So thank you so much, Bryce and Heather. Great presentation. I really appreciate you both. And Bryce, thanks for being here. We appreciate you a lot.